Is cancel culture creeping into home buying? You know, owning a home is the American dream, but at the moment, it's more like home buying cancel culture. According to a 2022 survey by home warranty site Cinch Home Services of 1,000 Americans who have tried to buy or sell a home in the past year, more than half of buyers, 51%, say they had a home purchase contract fall through in that time period. We are definitely feeling this here in our Denver, Colorado market. The numbers we watch are called back on market, which is where a house that had been previously under contract or pending comes back available. This is when a buyer terminates a contract and the home is for sale again. Hi, I'm Cher Revolinski from eXp Realty. I'm a realtor here in the Denver, Colorado area, and I love educating and guiding my clients, especially during a shifting market. Be sure to like, comment, and subscribe to join our weekly discussions about the real estate market. So, why is this happening, and what can you do to make sure that your own real estate offer doesn't crash and burn? Here are some reasons deals are collapsing right now and what to do to help prevent this from happening to you, both on the buying side and on the selling side. So number one, rising interest rates are causing financing to fall through. When buyers first start looking for a home, they often check into mortgages to figure out how much home they can afford. The problem, in a mere year's time, interest rates have nearly doubled from the low 3% range in 2021 to the 6 to 7% range today. As a result, buyers might not be able to borrow as much now. In fact, that Cinch survey found that 42% of buyers had to pull out of home deals did so because their mortgage did not come through. Many home buyers started their pre-approval process earlier this year or even last year. Those buyers may have been losing out on the bidding wars earlier this year, but are back in the market trying again. Today's market is much different, and the interest rates may have taken a big bite out of what the buyers can now afford and what they qualified for months ago. It's important for agents to check the current affordability for these buyers to make sure they aren't showing them homes that they could afford at the beginning of 2022, but that are now out of reach. An experienced agent will know how to help you avoid this potential pitfall. You don't want to get close to closing before finding out that your deal can't complete because of a financing issue. So what to do? As a buyer, make sure to lock in a low interest rate before you start home shopping. But if that doesn't work, try looking at different loan options to see if you can find one that still works for your deal. As an experienced agent, we typically have a lot of exposure to different loan products that can help solve a problem. And being connected to great lenders makes all the difference. I only use the best lenders, so let me know if you need a referral to one of my problem solvers. Also, see if you can figure out how to lower your interest rate by paying upfront for points. This can be accomplished in a variety of ways. Sometimes you can use some of the money you're going to use towards a down payment and use those funds instead to buy down the interest rates. A savvy agent can also help negotiate with the seller to pay towards helping you buy that interest rate down. In this market, seller concessions are starting to come back, and this means that sellers offer funds towards the buyer for closing costs. So be sure to talk to your lender for details and options about your specific situation. Regardless, buyers should check in with potential lenders every 30 days to keep their borrowing estimates accurate. You want to stay informed of what you currently are qualified for, both for the overall purchase and for your monthly payments. Another scenario that home buyers may encounter in today's real estate market is if the appraiser disagrees with the purchase price. The appraiser is an independent party that determines the value for your lender. Regardless if you paid asking price or over, if the appraiser thinks the home is less than contract price, this can create an issue. The lender won't loan on an amount that they don't believe the asset is worth. According to the Cinch survey, 35% of property purchases fell through because of appraisal problems. This can happen as a result of bidding over asking price in a competitive situation. If the appraisal does not agree with the price you wanted to pay, there is a gap. This is called the appraisal gap that needs to be covered. It was common earlier in 2022 and even in 2021 for buyers to agree to cover this gap by bringing extra money to closing. In today's market, appraisal gaps can occur both from overbidding and as a result of any expectation on the appraiser's perspective that the value of the house does not meet the asking price. Statistics from CoreLogic showed that in May 2021, 19% of home purchase transactions had a contract price above what the home appraised for, which is unsurprising since the market had been so hot. So what to do? Before you get into a bidding war, keep in mind how far above the purchase price you think you can go and still cover the mortgage if the house doesn't appraise for that amount. In other words, try not to bid over your head, and if the appraisal comes back too low, you do have a couple of options. As a buyer, if you can afford it, you can bring additional money to closing. It's also a time to negotiate, and the buyers can ask the seller to participate. This can be the seller agreeing to reduce their purchase price. A lot of times, both sides give and take until they come to terms with how to deal with the covering the gap. Beware, though, if negotiations don't work, this can result in a contract termination. As a seller, receiving an over-asking price offer can feel like a major win, but keep in mind that you have to sell the home twice, once to a buyer and a second time to the appraiser. When working with a seller, I have steps I take with each appraiser to head off any problems. If you're thinking of selling, be sure to reach out and let's talk about this protection for you. Number 3. Okay, back to our list of why home contracts are canceling. We get it, times have been tough, and with the currently high inflation, it's easy to just put purchases on a credit card and worry about it later. But if you're a potential home buyer, you need to keep an eye on your debt to income ratio. Your DTI ratio calculates how much you owe each month versus how much you earn. Specifically, it's the percentage of your gross monthly income before taxes that goes towards payments for credit cards, car loans, college loans, and yes, even mortgages. The lower your DTI, the less of a risk you are to lenders and the more you can borrow. You'll need to talk to a lender for specifics in your situation, but generally speaking, the mortgage lenders will look for your DTI percentage to be about 43 to 45%. So if your gross income is $2,000 a month, the maximum of debt showing on your credit report can't exceed $1,125 monthly. So what to do? Though it's tempting when money is tight to just pay the minimum on your credit card and let balances go up, a better move for home buyers is to try to get their debts down before applying for a mortgage. It's always a good move to scrutinize what you're spending money on each month and see where you can cut back. A couple of months of doing this can really pay off when the mortgage lenders pull your accounts and credit. Also, please don't buy a bunch of big ticket items while home shopping, as this will negatively affect your DTI. You might also want to weigh whether, in today's uncertain economy, if you feel financially secure enough to buy a home. You know, it's normal to feel a bit uneasy about the state of the economy right now. If you're not certain about your job security, now may not be the best time to take on a large debt, like a house. In uncertain financial times, it's always wise to shore up your emergency funds for life's curveballs. And if you do decide to move forward on a home purchase, aim for properties comfortably within your budget. The fourth reason buyers are canceling contract is a gut punch. Home prices have dropped and buyers simply found a better deal. While most failed real estate deals today occur despite a buyer's wishes, in certain cases, buyers are actually deciding to back out. According to Cinch survey, 23% of buyers have pulled out of a contract, and the reason might surprise you. They found a similar home at a lower price. As our real estate market has slowed drastically from red hot earlier this year, price reductions are starting to be more of the norm. Buyer's remorse is typical on any large purchase, and it can be something to manage. In this day of online home shopping being so attractive, a buyer naturally continues to look at homes, even if they're under contract on another house. So if they continue to shop around, they may very well find a home that they may like better, and it may be at a better price. If they feel they've overpaid on the current contract, this may result in a termination. So what to do? Buyers already under contract in a declining market have several options. First, they can seek a reason to terminate the contract without penalty. For example, there might be title, condition, financing, or appraisal contingency with a way out. If you're ready to terminate because of a declining value, don't forget that you may have an opportunity to negotiate a lower price with the seller. But remember, if you're walking away and without a contractual condition, you may lose your earnest money. That is typically about 1% of the purchase price, which may be less than the declined value. But keep in mind that even during 2008 housing crash, when prices declined so significantly, our Denver market fully recovered within just a couple of years. And just look at the appreciation we've experienced. So if you're planning to stay in the home for at least a few years, history would say that your investment will appreciate. So overall, we shared 4 major reasons how this cancel culture has crept into real estate, which is causing a flurry of contract terminations and back on markets. Number 1, rising interest rates causing financing to fall through. Number 2, appraisal gap issues. 3 is creating too much debt on your credit cards, throwing off your ratios. And 4, buyers kept shopping and found a better deal. All of these can be mitigated. So whether you're a buyer looking for a deal or a seller looking for a stress-free experience, give me a call. I've been in real estate since 2015, and I've got the skills to get you where you want to be. I'm Cher Revolinski from eXp Realty, 303-884-2738. Reach out and let's get started. Talk to you soon.